Hi everyone, welcome to Share and Review. Today we're going to take a look at ANZ Bank, and before I do that, obviously just a little bit of housekeeping. So remember this is not personal financial advice. It's certainly for educational purposes only. Whilst I remember, next week we're going to take a break from doing just the review, obviously share and review, and also a look at the NZSX50. I'm going to be away and I won't have any access to the internet or anything like that. But hey, keep your comments coming in because I love being able to do share and review or help out with any investing challenges that you might be experiencing at the moment. So I'm happy to do a video on it. So keep those coming through. They have been awesome. Let's have a look at ANZ. Right, as you can see here, I've got ANZ New Zealand listed here on the screen. Obviously, a bank like ANZ, it is dual listed, so it's listed here and in Australia. And as to most of our shares that we see on our main board, most of them, not all, but most of them do have dual listing. So we can see that last week we had a lovely positive week, which is really good. One thing that we're starting to see with ANZ at the moment is this little bit of line of resistance. So at around sort of that $32.90, we can see that it's hitting that at the moment. It's hit it a couple of times and it's yet to break through. Now, what can be a good indicator is if it can break through that $32.90 range, then likely it is going to continue on an upward trajectory. Quite often when shares break through, and you can see that down here, we hit about that sort of $28 mark and it went sideways for a bit. It sort of hit it a couple of times, three or four times. Then it broke through and we had a strong rally. Okay, so that was from about October-ish last year, went sideways, had a little bit down, and then all of a sudden, when we got to about the 1st of January, it broke through that and we had quite a few good strong weeks. We've gone through a bit of a sideways consolidation and we had another strong up week back in July. Then obviously the market fell again, but then it started progressing, which is looking good. But like I say, there's that line of resistance now around that $32.90 mark. So we want to see it break through that and it could continue on its way. Let's go over to the 5-year chart. And you can see in the last 5 years that where the prices are at the moment, that's certainly the highest it's been for in the last 5 years, which is great. It's a good pleasing sign. We'll just go back to the 2-year chart. We'll put our moving averages on just to get an idea as well. And remember, I always use the 30 exponential and also the 15. No secret behind these numbers. They are just what I use. It's about being consistent and using the same numbers. You can use whatever ones that you like. So here you can see ANZ is trading above both of those on the weekly chart, which again is definitely positive. We want to see that happening. You can also see back here around the 23rd of July last year, those moving averages crossed. So that's where the 15-week moving average crossed through the 30-week, and obviously it carried on. Sure, we went through a bit of a sideways patch, and then we had a good strong rally, which obviously is great. So the moving averages have come back to that 15-week. No surprises really, because if they get too far away, then the price tends to get overextended, and at some point they do tend to come back to those moving averages. So it's what we want to see. So that is a great indicator there for ANZ. I'll take these moving averages off and we'll also just get a comparison just to see how it's moving in relation to the main board. Here, up. Okay, so I'm having a little bit of difficulty trying to bring the main indices up. It won't bring up a line graph for me, so we'll just move on. I'll go back and put my moving averages back on again, just so that we can talk a little bit more about that. Right, so I'll take these moving averages over to the daily chart as well and just sort of have a look, because obviously that's where things move a little bit quicker. But because I'm a longer term investor, I tend to hold things for medium term. So at least a couple of years, 1 to 2 years at least. Occasionally I get hit out earlier and it may not last that long. But you can see here again that the moving averages have or the share price, sorry, has come back to the moving averages. And you can see here back on the August the 21st, that's when the moving averages crossed. And again, like I've just been saying, we're sort of going through that bit of a sideways patch at the moment. So I don't think there's anything that we need to be concerned about at this stage with ANZ. I think it is certainly looking like a potential share. It's definitely in my portfolio. I haven't been adding to the position, but it's definitely a share that I have got in my portfolio. ANZ do pay a regular dividend. They pay that every 6 months. And something that I do because of a company like this, I tend to do dividend reinvestment plan. And what that means is instead of receiving the cash dividends or cash payout for the dividends, I actually use it to reinvest back into the company to buy more shares. Now that works well for me. It means that I quite often buy the shares at a discount, and I certainly don't pay any brokerage. So it means that I'm starting to then earn a return on shares that I have reinvested. So that's what reinvestment plan stands for. So anyway, I hope that helps. Sorry that I couldn't bring up the comparison to the NZSX 50, but from the last time that I did look at it myself for my own research, it was certainly trading above that, and that's why it was in my portfolio. Okay, and remember, hey, if you've got any shares that you would like me to have a look at, let me know in the comments. And also remember to come across and try my share trading signal service. This is where I hopefully cut out a lot of the noise for you and just narrow the selection process down to a very small handful of shares. And from there, you can do your own research as to if it's appropriate for your situation. So we'll see you in a couple of weeks. Take care.